All right, hello everyone. My name is Forrest, and this is Bitcoin Not Crypto. Today's episode, I'm going to talk about basically how Bitcoin is the perfect candidate. Bitcoin and MicroStrategy and all other Bitcoin derivatives basically are the perfect candidate for a short squeeze and gamma squeeze. But before I get into that, of course, I want to tell you about my Geyser Fund. This is the crowdfunding platform that allows for Bitcoin payments to fund projects. And I have a project on there called The Land of Volcanoes and Bitcoin, which is a documentary that I plan on producing and creating, which is about Bitcoin's adoption in El Salvador, what El Salvador was like before, currently, and in the future, based on creating and allowing Bitcoin to be a national currency along with the US dollar. And I hope to go to El Salvador, check it out, and see how easy it is and all of these things to transact with Bitcoin. So if you want to support a movie like that, check out the link in the description. So of course, you're here to hear about how Bitcoin can make you a lot of money, right? Number go up technology. You buy it, basically, it compounds on the growth of basically 45 to 66% a year on average. It doesn't go straight up, but this has been historically the best performing asset of all time, and you're here to try to make money off that. Now, making money is a weird thing because, of course, you have to convert that back into money, which is fiat. So I don't know, not something I would do. I just like to hold Bitcoin. I do hold a little bit of MicroStrategy, which I plan to just roll into Bitcoin. I treat that as basically a 2x derivative of Bitcoin based on Michael Saylor's technique of buying convertible debt at extremely low interest rates and actually increasing Bitcoin per share whenever they do so. Now, this is seen as an incredibly risky strategy, even though the debt they're acquiring is at, just these insanely low interest rates. Now, with that, there are a lot of people who believe that Bitcoin is worth nothing. It doesn't take that far down the YouTube rabbit hole to find videos about talking how people, there's that classic Peter Zion video of him on Rogan talking about how Bitcoin has another $1,400 to go. It's going to be somehow negative dollars at that point. It's gone way up since then. If you had taken his advice of shorting it, or, well, he didn't directly say short it, but, of not acquiring it, you have lost out on the opportunity cost, basically, by following his advice about Bitcoin. Now, what is a short squeeze? What is a gamma squeeze? A short squeeze is basically a bunch of people who have been selling the stock and holding basically negative shares are forced to buy back because they're being margin called, or basically want to close their position because they see a momentum in the market of it going higher and they are losing on their trade and want to close it before they lose more. Now, when that happens, they are actually forced to buy shares, which actually increases the momentum. So if there is enough short selling happening, it can, and the price appreciates enough, it forces a lot of new buyers into the market that were previously shorting it, which increases that momentum and basically makes it shoot up really, really fast. A gamma squeeze is a very similar thing, but it happens with options and it happens with market makers basically hedging their bets. And with options, one contract of an option has an underlying 100 shares. So it basically is a leveraged way of trading that people do with options, calls, and puts. And it creates a lot of demand, right? One option contract, there's going to be 100 shares underneath of it, and it incentivizes basically market makers, which are the people that buy all the shares and sell the options on it, or vice versa. But basically it creates a lot of volume. So a gamma squeeze and a short squeeze are very similar in the way where they'll drive the market up. It's just a little bit different in basically who's covering and what they're covering. Okay, so how is Bitcoin and MicroStrategy the perfect candidates for a short squeeze? Now we can look at I think it's helpful to look at a non-perfect candidate of a short squeeze, a very famous gamma and short squeeze, which is GME, good old GameStop, AMC as well. They're both great candidates of how they are terrible for that. Now, the reason they're terrible is because every single time that a short squeeze happened or a gamma squeeze happened on those stocks, which was incredibly popular, and the reason they were good candidates at one point and for a short amount of time was because of the amount of short interest they had on it. So there was actually more than 100% of the stock was being shorted of GME. So of course that makes it a very good candidate. Now the reason that basically it was short-lived, the short squeeze was short-lived, was because a company has their own money printer. A company can issue more stock. This happened with AMC famously and basically destroyed the short squeeze that happened on AMC because it is the fiduciary duty of the CEO and of all the board members to look out for the interests of the shareholders. Now, the interest of the shareholders is for these companies not to go bankrupt. And one thing they can do is they can raise a ton of cash by selling their shares into the open market, and they can dilute all of these shareholders by issuing more shares. So they do this. And what happens in the market is the market is based on supply and demand. And when you increase the supply of shares available and the demand stays consistent, the demand is met, and that lowers the value of those shares. It lowers those values of those shares basically to the equivalent of the total cost of the shares that go in, if that makes sense. I'm not sure I explained that perfectly, but basically if they raise $5 million worth of new shares, then that dilutes all of the rest of the shares by a total of 5 million spread out amongst those shares. So it'll lower the value. Now, basically, they're hoping that demand increases or continues to increase or continues to stay consistent. But with a short squeeze, basically, what happens is the interest or the ability of the market to continue to force shorts to cover, there's sort of an equilibrium. There ends up being enough that get out, there's some that can stay in based on the margin that they have or based on their ability to just kind of keep adding to their short position, and that hits an equilibrium. Now there is more short interest now in MicroStrategy, in MSTR, than there is in GME, GameStop. There's 10% plus on GameStop, and there's 20% plus short interest on MSTR. Now what happens, right? MSTR, when they dilute their shares, they actually increase, because they immediately buy a hard asset with that money, they increase the Bitcoin per share. They have a yield, right? They call it a Bitcoin yield on their shares, which is such a clever thing to call it. But basically, they increase the Bitcoin per share, which actually increases the value of their shares, because that's why people own it, is to get exposure to Bitcoin and to have leveraged exposure to Bitcoin and to continue with the idea of these convertible shares and these bonds to be able to increase the shares. So it's the ultimate meme stock in that way, of the idea of basically Michael Saylor is going to increase his ownership of Bitcoin through these convertible debt offerings. So it's a great candidate for a short squeeze, with the example of being able to dilute shares, but it not diluting the value that MicroStrategy as a stock offers, but it actually increases the value because they have something that they can buy that everybody agrees that holds it, basically, that they should buy, which is Bitcoin. So let's talk about Bitcoin itself being a short squeeze candidate. Now, there's not a ton of shorts. I mean, there's these things called perps, which happens on these certain exchanges like Binance, which is a type of leverage trading. There are futures leverage trading through options, but that doesn't necessarily correspond with buying and selling of spot Bitcoin, of actual on-chain Bitcoin. And these things do drive the value and the price of Bitcoin, but they don't actually create a supply crunch. Now, that is another thing that can happen, basically, is a supply crunch. And this ties into what will happen, I believe, with Bitcoin. IBIT, which is BlackRock's spot Bitcoin ETF, which actually holds Bitcoin and it's custodied by Coinbase. We don't have proof of reserves. We don't have proof of that, but they can't mess around with that, really. I mean, these giants, these trading giants, they do mess around with certain things. I mean, people will say, oh, the silver market's been manipulated by them. Yeah, through spoofing, not through saying that we don't have the reserves, basically, not through completely lying of what they own as the spot underneath, but they've put in basically fake sell orders and fake buy orders to manipulate the price temporarily, and that is called spoofing. So there might be some manipulation, but it's completely basically unreasonable to assume that the Bitcoin is paper Bitcoin, in my opinion. It's just too big of a lie. And if they got caught doing that, they would be done. All trust would be lost. Everyone would move over to Vanguard and to all these other funds that are being operated. Fidelity, I mean, Vanguard isn't one holding Bitcoin, but people would lose faith in all of iShares and all of BlackRock's funds. So they would move over to Fidelity, they'd move over to whatever else they are holding, that the equivalent of a more trustworthy ETF issuer would be. So they can't do that. They can't do that because it's just too risky. And they have no incentive to do that really either. They earn through basically a 0.25% fund rate that they charge to whoever buys the fund. So the more value that the fund holds, the more they make. So they want the value of Bitcoin to go up, and the way that the value of Bitcoin goes up is by Bitcoin being bought more than it is being sold. So they're buying, they're a net buyer. You can see the inflows happening. You can't necessarily track it per se, although people claim to. Anyway, so they have been approved for IBIT to have options. Now, when that happens, there are a lot of people that believe that Bitcoin is worth nothing. And there will be a lot of short interest that happens on spot Bitcoin through the ETF. And this will create an opportunity for short squeeze that cannot be diluted like AMC and GME, and it can't even be diluted in the way that MicroStrategy is diluting their shares, even though they're accruing more Bitcoin. So why this is because there is a fixed issuance of Bitcoin and a total market cap supply of Bitcoin of 21 million. So nobody, as much as people would love to increase their own supply of Bitcoin just magically by saying, hey, I have more Bitcoin, there is no, Satoshi Nakamoto couldn't even do it. It needs consensus over 3 different types of basically consensus mechanisms. There's the developers, there's the miners, and the nodes. They would all need to agree to just magically make more Bitcoin, and that there's a huge disincentive of doing so because that dilutes their own Bitcoin. So why would they want to do that? There is no fiduciary duty to shareholders, and there is just technically no ability to create the total amount of Bitcoin to increase that. So Bitcoin cannot be diluted. If there's a short squeeze that happens on Bitcoin itself, just expect the price to just skyrocket. It's just going to be beautiful. It's going to be beautiful. So that is it for today. Another sponsor of this show, the only sponsor of this show is the Bitcoin Well. If you want to support this show, check out the Bitcoin Well in the link in the description. They are a non-custodial platform that allows you to buy Bitcoin on-chain and on the Lightning Network and actually swap between the two with 0 fees. It's unbelievable. So they are open for Canadian and the United States residents, and They also have the cheapest fees for ATMs, and in Canada here, you can buy non-KYC Bitcoin through ATMs up to a certain amount. And so they are big on privacy. They're big on allowing people to take custody, or to basically forcing them to take custody of their own Bitcoin, which just improves the networking effect of Bitcoin itself. They're a great company. Check them out in the link from the below. It's where I buy all my Bitcoin, and I appreciate them for sponsoring this show. Thanks everyone for watching.